This is Justin AMZN for Friday, March 13th, 2020, Friday the 13th. We had a lot of craziness going on. So getting right into it, the very first candle, well, actually pre-market, we ran up way higher than where I thought we were going to open up. We really rallied pre-market and immediately trapped bulls buying above yesterday's high, which makes sense. It's getting way up here. It looks like bullish gap and go. Immediately sold off. They trapped the bears trapped the bulls once and twice here early on. Like, look at this. I'm trying to hover right here. Okay, so this is yesterday's high or Thursday's high. You can see on Friday, right above where I've got the horizontal cursor, those are traps. And from there, we sold off. So you had an opportunity right out the gate, but also about an hour into the day. And it just sold off both times really well. We can look at the options on that. Got way down here. Looked like that was going to be it. It was just going to continue going lower. And it just held the low from Thursday. That's really just about how far it came down and then started to bounce. The pattern here, actually, let me zoom in. So just zoom in on the day here. To me, this looks like, the pattern that played out is like an inverted head and shoulders here. You had kind of a retest of the 21. You really had like a neckline retest, like way over here and again over here. I don't know that I would say this held because this is a neckline though. I just think that was a price that people were buying at. And there was a lot of volatility really late into the day. There was the U.S. president got on TV and was making some announcements and talking about things, and we just rallied from there. It was like great news. Everyone was happy to hear things or something. It was just something sparked this rally. Immediately, it was trying to trap people selling off with a squeeze that was actually showing like it was losing bearish momentum, started to shift here to being an increasing bearish momentum, and immediately switched. And it was really in this last 30 minutes that a lot of the bearish volatility got sucked out and a lot of bullish volatility got priced in. And you can see that in some of the options here. So on the 1775 strike calls that expired the same day. So in the last 5 minutes, actually, this candle doesn't even do it justice. In the last minute, it jumped from 1775 up to 1786.31. I'm just going to show you on the 1 minute because this was crazy to see this happening. Sorry for all that jumping around. But the very last minute of the day, here, I'll just zoom in on the last half hour here. The last minute of the day, okay, it went from a low of 1762 in the last minute of the day. So it wasn't even at 1775. It was at 1762.91 and ran up over 20 points in a single minute candle. This is what makes trading the last 10 minutes of the day really challenging, because it can have candles like this and you can immediately be way up and trying to get out, or you can be way down and have zero left in that option. I was watching the 1775 strike, and it was just crazy to see this move. Again, looking at a 1 minute candle on the option at the end of the day. There we go. Okay, so it looks like it got down to like a penny. I mean, anywhere you had an order in here, probably like 25 or less. So like you could have bought 4 of these, to do absolute zero, buying at $25 a piece. I mean, I wouldn't have been holding into the last minute to get that kind of run up. And when I had an order sitting out here to get into a couple of these at 25 over in here, and I canceled it, I'm like, I think I missed it. I think I missed this move. And I had it canceled already when this happened. And I was just shocked to see this go way low and then go way high. It just astounded me that it could do that, because this is what I was watching for. I was watching for it to get that low over in here, and it didn't fill me at the 25 price. And then it looked like it was running up, made it up to $1. I'm like, okay, if it comes all the way back down, I'm just looking for that to happen again. And I don't like getting into those trades where I want to see the same thing repeat. Now, in this case, it repeated in a really crazy and obnoxious way that it went this high that fast and so late in the day. I mean, had it done that, had I had the order open here and it filled me, and then this happened like 10 minutes before the market closed, 5 minutes before the market closed, great. But in the last minute, I'm already looking to get out. So, I mean, this is not something I would have caught, even though I'm seeing it in the option that in the last minute it did that. It's just not something I would have been looking to still be in a trade like that. Now, it could have been something where I was in an option expecting it to expire worthless, and then it spikes like that. Like that's where you want to have your puke order kind of, in the opposite direction. You want to have okay, if this moves, I just need to be out of this option so I'm not in the money. Because really this had a bunch of folks in the money. Now, it could have been people selling the 1775 call above a position, thinking it won't get up there, I'll be fine, and a bunch of people got called away because it went in the money. I don't know. Similarly with puts, this is 1650 strike puts. They were holding a low of around $1 all through in here. Like you really could have done absolute zero of $100 here and just flipped it out at $2 a couple of times. $1 up to, okay, almost $2, I guess here. It was so far, that was so far away. It was just this volatility that was in here. And again, looking at the last half hour of the day, let me zoom back in here. There was just a lot of choppiness, a lot of volatility. You really had to catch some of these rotations where it was rolling over, evening star reversal, inside candle, okay, breakdown, get in. Or, okay, a couple inside candles here, get in, bearish, it's going to go down. It went down. And, you had a really nice kind of rest after battle here that continued lower. And then on the way back up, you had a nice big bearish candle. Looks like you're going to have the similar, rising three like these. Rest after battle, breakdown. Nope. Bearish candle. Oh, bullish candle. Oh, way bullish candle. Nice small candle inside and continue up. Rotate back down to just about that hammer price and continue on up. So there was opportunities to trade individual candles or look for these individual candles to, get back to get into something at a certain price. I wouldn't say it exactly held these pivots really well on Friday. The lows in here it did. Coming down into this price it did, but it quickly broke down and then didn't hold it coming back up. So these pivots were a little bit sloppy, but still give you a really nice framework. We moved from, quickly here from the top one to the middle to the bottom, back up to the middle to the top, middle, bottom. We're below. We almost made it back up to the middle here from below. This really held as really nice resistance. And then like I said, in the last half hour of the day, as we started to move up, once it got above this level, and then it held literally all day. Once it really broke down here, it really held this level just about for, 5 hours? It held that as a high for 5 hours, and then it was starting to break out. So really in the last 15 minutes, you could have been looking for some sort of a big move. Now the 1775 strike, that one was, not being priced in as where it was going to get to. So maybe 1750 would have been a little bit easier there. And just looking again to do some sort of absolute zero if you can get a fill there. So there were people buying. Yeah, I guess you couldn't have done that for $1. The last 15 minutes of the day, it was already more expensive. Maybe 1760. 1760 might have worked. So you were still above $1. I don't want to count getting in the last 5 minutes, but I mean, I guess you could. The low here was above $1. Yeah, getting into something the last 15 minutes of the day was really, really tough to do it with absolute zero. And it's so easy to get wicked out of these. So 1765, it looks like you could have been filled for $1, absolute zero, and just set up something to get out at 2, 3, anywhere higher, really, and then just look to, get out of that. And if we switch back over to 1 minute to see what this was actually doing in this time frame. So getting in for $1 could have flipped it out for 2, So sorry, here, the last 15 minutes of the day was this. So getting in for $1, getting out at 2 would have worked, getting out at 3 would have worked. In the last 5 minutes a day, I'm like, okay, I would just want to get out of this thing. I don't necessarily want to sell at 0 or less than 1, but I'll just send out a market order and be filled at whatever. That's kind of thing. It's like you don't want to be fighting a limit that doesn't get there, and then all of a sudden it does something like this and spikes up or whatever happens. There's an opportunity to make something on that, and so this is really the psychology of it: is where am I okay getting out of this that I wanted to exit at 0? I've got minutes left, and I have the opportunity to go from risking R to getting 10x. Getting all the way up to 11, so you make 10R on that trade, but I'm going to have to hold that into the last minute of the day. No, thank you. I don't want to be in the money on one of these options. I would just set a limit order out and just be happy with whatever I get. That's the trouble with these that do this kind of big move in the last couple of minutes. And I mean, literally the last minute, 2 or 3, I want to already be out of those. So this is one that, I'm kind of winding down right at the end of the day. Like I said, I was watching this. Did not work out for me. I was watching, 1775, but it did not work out for me to get in and out of something right at the end of the day like that. So we'll continue to look for those. I love seeing that, but just being able to set up a trade in that time frame, I'm not good enough yet to do that, and I definitely don't want to be in the money on something like this because I don't want to have to afford that either. Taking a little bit of a step back. We're way up here. We spiked way up right at the end of the day. Looks like, okay, everything's good. Everything's better. We're going to run up. We're going to, get back up into the next range. Well, doing this late on a Sunday night, and, I like doing this later on a Sunday night because I have a better idea for where things may be Monday. But again, the futures are limit down. And so I would expect another big move down, and that things could be shut down early in the session, in the open hours of trading in the morning. What does that mean for Amazon? Probably a gap down below or into the same range that we were chopping around in. If things get shut down, you're going to want to have time on any options you get into. You're going to want to let things settle also. I would not be surprised if we moved even lower into the lower 1600s before the market gets an open market hour limit down of 7%. So it's limit down right now 5% on the futures. It's very easy and likely we'll get a limit down at 7% once things open. After 15 minutes, it opens back up. The next limit down is 13%. That's entirely possible too. And I believe that would take out this low. I think we would be in the low 1600s or upper 1500s. From there, it gets a little crazy because, well, even more crazy, I should say. Coming back into the daily here. Let me zoom back out a bit. Okay, so we haven't been in that kind of price range. That's the lower edge of this, or actually below it. This is where I thought we were going to be further down here, opening up Friday, and instead we had a massive rally. For right now, it looks like we're going to have a big gap down, similar to this bearish candle, gapping down to this candle. It'll be something like that. Maybe gapping down below Friday's low, which will be a huge bearish gap and go. I don't know that I want to short that there. I'd much rather short it on a rally back up. If you're in shares, if you're in something bullish, try to hold on, try to wait for that retest to get out. Try to wait to buy some protection till it goes back up some. It should go back up some, but it will likely make a lower low here before it goes back up. I was just kind of counting candles the other day, trying to figure out, is there any sort of pattern to this? There were 1, 2, 3, 4, 5, and then the sixth candle made a new lower low, and then 1, 2, 3, the third candle made a lower low. This looks like 1 and then 2. Tomorrow, Monday's candle will make a lower low. So it's like, it's getting closer, getting faster that it's dropping. That's just the significance of this kind of move. When we did that back here, there were many more candles in between. 1, 2, 3, 4, 5, 6, 7, 8, ninth candle. And then 1, 2 more there. And then we continue making lower lows. And then from here, we went up quite a bit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles. We started to make this pattern of some lows, and it actually held pretty well. I can't really draw something like that unless it's extremely steep right now, which just shows, again, how extreme things are with going bearish here, with going down. If you were selling, you should have been selling further up, getting out of any bullish position when it had some rallies, including Fridays, unfortunately. Looks like that kind of rally, and it looked like it was going to continue. But we just need to be really nimble and to be getting out of positions as they're increasing, as they're making money, because this market has just been really limiting on a dime. It keeps hitting these limits. This is, I think, the third day in a row for futures to hit the limit. So it had a limit down Thursday night, had a limit up. No, I'm saying it backwards. Or not saying it right. So limit down Wednesday, and then limit up Thursday, and then limit down. Okay, I'm going to have to look at it again because that doesn't sound right either. Because Friday, this is the next session. So kind of like Friday night session. So yeah, Wednesday, Thursday, Friday, even though it's Sunday, I know. So limit down Wednesday, limit up Thursday, limit down Friday, which is Sunday night. That's where we're at. Yeah. So those are the three in a row. It's a lot of volatility. It's a lot of jumping back and forth. There's some great opportunities to get in some options. We just got to pick the right direction to be in the right ones, or do some, I think it's either straddle or strangle. I always mix the name up, where you're buying some out of the money options. If this gets pretty low in here, I would not be opposed to buying some out of the money calls up back around like 1750, looking for that rally. I just don't know what kind of time frame. If you got the capital to do that, go out into April expiration, look to get out as it moves up. And then when it's up here, if it gets up here, look to buy some puts when that are out of the money in April or even May expiration for it to go back down below 1600. I wouldn't be surprised if we're back down into, gosh, I don't even want to say 1200s, but I think there's some more pain ahead. I wouldn't be surprised if we took out this low at 1307. If I can cover it. Oops, I had it. 1307 right there. I wouldn't be surprised if we got down to 1307 and got back into the 1200s, which would be crazy, because if it does that over the next few weeks, let me see if I can zoom out a little more. Actually, let me switch to a weekly. Maybe that'll be cleaner. Sort of cleaner. If we come down here, it's going to be a massive, distribution up here. But if we can come down to 1300, 1200, anywhere in there, we'll be back to like this channel level. And if it happens, so April 20th, I believe, is options monthly expiration. Yeah, that's monthly expiration. That's around 1200 on this line. If we get down there, that'll be, as faster than like this incline, these rallies that were seemingly massive on this bullish move, this bullish market that we've been in. If we come back down that fast, you can see we had some moves that reversed, that pulled back, so we had a big move, a couple 100-point move up, or a few hundred. What was this, going from like 1,000 up to like 1,600? People didn't think it would go that fast, so they were shorting it all through this, trapping more people. Well, eventually we got that pullback, and that's where some of these pivots are. It was in the end of February of 2018 that I started doing this. There it is. February 26th, 2018 was when I started doing just Amazon. And I think it was that day. I don't remember that being a Friday, but it may have been. Anyway, I started drawing some lines in here. We're about to revisit some of those if we get this big, massive bearish pullback. These uptrend lines, they may be fitting okay to some of this, but we may draw a couple more, and draw them further down, and continue to track. Okay, is it going to be there? Is that enough? Are these even worth drawing? Is it going to be there? What if I draw one more? This is, I'm not getting rid of these lines yet because they were important back then. We'll look for them to be pivots again, but I can't tell you now if they will be. So that's a nice target for you. Right around 1172. There was some consolidation at that price, 1172. If we come back into that 1170 or so, that'd be a great place to buy. Start loading up. If you're in now, look to get out and look to reload. Look to protect yourself with some puts on the way down. You can protect yourself with more puts on the way down than you have, hundreds of shares invested. So, just understand how to protect yourself with options on the way down. I'm gonna get rid of these just because I'd rather redraw them on the daily than on the weekly. That one was there. Okay. Email me if you have questions. I can point you to a great place to learn for free. And then from there, if there's more you want to learn, then there's some paid options to do that. But I'm happy to point you to the right direction to learn and be able to do things to protect anything that you're in with Amazon or anything else, because what's coming here looks very bearish, and it will take some time. It'll take a lot of time, I think, before we're actually making higher highs and being back into, looking like anything bullish. Like I said, after hours, we've already taken out these lows over in here, which means that we've shifted from these being uptrend channels to something more bearish. And I haven't redrawn that to figure out what that looks like. Let's see. I'm as far as I can be on a 4 hour. And I'm not showing after hours. Can I show after hours? I remember how to do that. Equities, show extended hours. There we go. Okay. So here you can see. Okay, that's crazy. Is that really where we bounced? Was that line? Man, that would have been great to be having the capital to buy something off of that line. This is how well this line held here. We've run up. We didn't quite get back up to that line, but this line is working. Look for that to be another pivot, this uptrend line, and then these other lines here. This is a really good channel. Not that one. Let me select the other one. That one. This is a really good channel. It'd be great to get back into that channel. But we almost made it back up there. It looks like we're not going to get back up there. We may be back down here. I wouldn't be surprised if we opened up down here and or below it, and we're continuing below it. But this is what I'm talking about. We're about to take out this low from earnings, going back to October. What's the low? I'm not on it yet. 1672.12. I think it's 1672.12. I think that's the low. Because it was almost down to 1665. Last time we were at that price was way back over here. So we're about to take out. I think we'll open up or have pre-market below this price in the morning, which will shift this to bearish. I think we'll get below this over the next couple weeks, if not the next couple days. And then 1307, I mean, this did not take long to go from 1700s down to 1300. It took a matter of a couple weeks, which is the predicament we could be in, into April or even by the end of March. It just really depends on how bearish things are overall. We've already come a really far way. It seems like we shouldn't be able to go this far, this fast, but we're doing it. And because Amazon had this great earnings, it was even higher and has even further to fall. Think of it if it opened up here relatively flat. It, going from here to here doesn't seem as far, but because it got all the way up to almost 2200, it's fallen significantly lower. I mean, I was just saying 1172. No, that's not quite half, but it's pretty close to half of 2200. I mean, obviously 2200, 1100, that's half, but 21, it it's 1,000 points lower from 2185.95 to 1172 is over 1,000 points lower. If we do that, basically from February into April in 2 months to lose that much, that's nearly 40%, almost 50%. It's high 40% drop. So it's hugely significant, and the time is crazy to do that. So I don't mean to be all doom and gloom. I just want you to be realistic in terms of what the potential is for these drops. And I think it's sinking in more as I see things happening around me where there's a lot of fear still coming in. And so I don't know that we put in the bottoms yet. I think there's more to go. I think there's more bottoms to go. I really hope this helps. Make sure you know your risk. Fall in love with the absolute zero method where you're, getting into an option that's further out of the money. Take some quick gains on those. Look to reload with other options that are 5, 10, or 15 point strikes away from the one that you started with. So you're avoiding wash sales if you're losing on those, or look for the ones that are the 0, double 0, 25, 50, 75 is a nice round numbers. But be ready for some pullbacks. Be ready for some crazy rallies that don't seem to make sense, and then some more pullbacks. But go back to this and see what we were doing off of previous all-time highs and how the sentiment was here, and then fast forward, because what we're doing right now is 2, 3, 4 times as fast as this, and it's not just Amazon; it's everything. But we've been through this before. We'll get back out of it again. It may not be this year, it may not be this quick. It may take a couple of years to get back up to this price. We'll eventually get there. Amazon is one of those service industries that people are going to be relying on through this crisis right now, for things to be delivered and not to interact with people. So I think there will be already a lot of people using Amazon, and I don't know how much that'll affect their bottom line in terms of getting into the chart and what that means for the future outlook. But that's more the fundamental approach. I'm more focused on the technical here, but this isn't going away. It's not going to zero. It may pull back a few more hundred or more than that points. But make sure you're learning something as you're losing money, so you're paying a price to learn, and do whatever you can to protect yourself. And learning more on how to protect yourself in whatever positions you're in. Hope that helps to really dive into options and figure out how these things are moving. Make some of these things simpler by looking at the options and figuring out, okay, how do we kind of hedge this position? How do we get into something with smaller size and really trade this very nimbly? That's what I'm trying to do. So hope I'm helping, and reach out with questions. Again, hope this helps. This is just Amazon. Thanks.